time for the Your Personal Bank Show with Ferenc Toth, president and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show with Ferenc. And hey, it's been a pretty exciting week this past week. I've got a couple of personal things that I just want to share with everybody that's kind of been fun. Since doing the show, the information that I've been sharing has been going out actually nationwide. And yesterday, I had a good friend of mine from the military. Back when I was stationed in D.C., I was in the Old Guard, which was part of the U.S. Infantry. We worked, we did ceremonial events and things at the White House and various things in D.C., but a very good friend of mine, Dwight Dodd out of Tennessee, sent me an email and said, "Hey, I heard your show." And the cool part about it was he's a band director, and he goes, "I had no idea you could build significant cash value in a life insurance policy." And I said, "Dwight, that's really cool because that's my goal of this show, is to help educate that information to people, that this is a tool that's often used by the wealthy, but unfortunately is just not very well known by the average American." So my last week's show, in fact, and if you want to go back and listen to any of the previous shows, I highly recommend you do so. Go to yourpersonalbank.com, and you can watch any, or listen to any of the previously recorded shows. But one of my last thoughts last week's show was, people, I know I'm talking to the choir here. I'm preaching to the choir, if you will. A lot of the folks that listen to this, and there's some that don't, but I'd say majority, they're focused on money things, financial things, obviously, because, hey, this is money radio, right? And so what they don't realize is, like a carpenter, a carpenter has a number of tools. And this is, like I said, a thought that I finished up on last week, and I thought it was so valuable that I just need to touch on again real quick. A carpenter has a lot of tools to do this job. If he's building cabinets, let's say, he's got a lot of different tools that he uses, or he or she uses. And if you're missing one of the key tools, let's say it'd be a hammer, could that carpenter build a cabinet? And the answer is probably. Would it be as efficient? And the answer is probably not. My point is this: what I find, and again, I've been in the financial industry over 22 years. I meet with all types of different clients. I run into this situation all the time, like my good friend Dwight. I had no idea. That's the response that I get all the time, and that's why I decided to do this show and put this information out there, because whether I'm, again, speaking to an old friend of mine, a potential client, I'm doing a workshop in front of 100 people, it doesn't matter. The majority of the time, the response I get is, I had no idea this was even available. Or that it worked this way, or I looked at it and the numbers didn't pan out like I said, or like you're talking about. And like I have shared with you, and again, go back to previous shows on yourpersonalbank.com, I talk about the difference of how we structure these contracts to maximize cash value. One of the little quick secrets I tell people all the time is, if you're looking at the numbers, and by the way, there's an illustration that's issued on every one of these contracts. It has to be. And if you don't have 50% or more cash value available day one, it's not structured right. It's just that simple. And it's usually significantly more than that. But like I said, that's just a good rule of thumb to look at right away, immediately. Quick, simple, in 2 seconds, you can figure out if this is structured correctly to maximize cash value, or is it more designed to maximize death benefit? There's a lot of reasons why most contracts out there are not structured that way. One, they're just not built to do that. Most insurance contracts are not built to maximize cash value. They're built to maximize death benefit. They may have some cash value, a little bit or whatever, but that's not how they're designed or structured. And many companies don't even offer tools that maximize cash. So, of course, their advisors or agents, whatever, are not familiar with that. Why would they be? You don't have that as a tool in your toolbox. It's not a product they deal with. It's not something they're familiar with. So why would you even talk about it or even think about it? It's just not one of those things. Or the more nefarious reason is, I've shared this also with folks on the air, is, hey, guess what? How does the agent get paid commissions? Do you think it's on cash, or do you think it's on death benefit protection? Cash is cash. There's just not much in the way of commissions with cash, okay? So it's pretty obvious that a larger death benefit is where the commission structure is based. And if in any company, most of them are guilty of this when they're recruiting new agents. What are you going to talk about? The big commissions or incomes that can be earned if you're successful. So it's a recruiting tool, and that's where the focus is. And there's nothing wrong with all that. It's just understand the system and the process of how things are done, why it's done the way it's done. So when you're looking at this personal bank concept to maximize cash, and this is the last thing I'll share on this is I love this one. People ask me, start asking me death benefit questions. I had this last week with another client, and I just stopped him. I said, hang on a minute. Let me ask you a question. Are you wanting to fund this tool to maximize cash or to maximize death benefit? He goes, well, I want to maximize cash. I mean, of course, that's most people I'm talking to. That's what their goal is. I said, well, then I'll answer your questions. Don't get me wrong, but why are you asking me death benefit questions then? In other words, who cares? Does the death benefit really matter? Yes, there is one. That's the collateral for the loans. You have to have one. That's also what gives you the tax-free capability of accessing the funds, advances on the death benefits. I mean, it's a valuable part of it, but it's not really your goal or purpose. So, frankly, do you really care what the death benefit is? And he was like, well, no, not really. Then why are you asking me questions about it? It's going to be what it is. And then, of course, that's based on how much you contribute, age, health, and some other factors. And when we run the numbers, we'll show you what it is, so it's not a surprise. But again, is it a determining factor? And the answer in his case was, and for most of my clients, no. And I said, let's focus on the cash side. Let's show you how to maximize cash. And then, like I said, we'll touch on, I did the last week on the variable loan option where you can potentially get the positive arbitrage. That is another game-changing thing that's come about that's it's brand new. It's the only product I'm aware of in the industry. I'm not going to say there isn't another one. I'm just not aware of one. And we look at a lot of them. So, and I mean, gosh, I got folks listening in Tennessee even. So I think if something's out there, I'd probably be one of the first to know. The bottom line is you have the option of the fixed and variable loan. Let me touch on that real quick because the variable loan thing isn't somebody else said, I love the idea, but it's a little scary because a lot of people remember like variable loans on mortgages back before 08, 09 and got burned. Okay. I said, well, here's how it works. And let me give you an analogy. Let's say you could get a mortgage on a house. We all know you can choose fixed or variable loan options, right, on the interest that you get paid. Unfortunately, when you get a mortgage, you got to choose one or the other. These days, of course, people are choosing the fixed most of the time because interest rates are very low. They remember getting burned previously, and rightly so. Fixed is the better option for most cases. But what if you could get a mortgage and each year you had the opportunity to choose whichever was the lower rate, the current fixed or the variable rate, and knowing the fixed had a maximum contractual guarantee of 5%, for example, which the personal bank contract does have. So you'll never have a loan interest rate of more than 5%. Why is that important? Well, currently you're getting credited 5%. So if you're getting credited 5%, you're getting charged 5%. It's a wash, and it basically the loan becomes at no cost. Now, there's things you have to do to pay it back and anniversary dates and all that. I'm not getting into that right now. But in essence, it's called a wash loan. But what if you could get a variable rate, which today's rates are around 3.4? It's based on the Moody's Bond Index Average. For those of you that want to know, you can look it up. It's online every month, changes monthly. By the way, when you make the choice, you're locked in for whatever that rate is for 12 months, so you don't have to worry about that. But if you were credited 5% and were charged 3.4, for example, like current rates, you get a 1.6 positive arbitrage on borrowed funds. Folks, you're making money on money that you took elsewhere. That's awesome, and that's what bankers do, and you truly become a banker. What I want to do here is we're going to touch some more on this, but we have an exciting special guest coming up in the next segment, Vimal Patel, and he has an incredible story and a journey that I want you to hear about. So we're going to talk to him over the next couple of segments. So stay tuned for the next segment, and we're going to talk to Vimal.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. We've got a special guest, like I said, Vimal Patel. And Vimal has a very incredible story and a journey that I want some of you to hear. Some of you are going to relate to this. So, Vimal, welcome to the program.
Thank you, Ference. I'm excited to be here.
Excellent, excellent. Vimal, if you don't mind, first of all, can you tell us a little bit about your background?
Yes, absolutely. So I started off as a pharmacist some 35 plus years ago. And had worked the regular pharmacy jobs, that you find the pharmacists at Walgreens and Safeway and places like that. From that, I really realized that there was more that I could do to help people, and that there's more to just health other than giving medications. So I really went into my own pharmacy, started a pharmacy that basically is known as a corner drugstore, where you walk in the old days and you'd call the pharmacist Doc. Sure. And say, hey, Doc, I'm not feeling too well, or Doc, my kid is coughing. What do you think I should do? So that allowed me to really get in touch with people and be more hands-on as far as being able to support them from a health standpoint. And that expanded out into what we call compounding pharmacy, which really means customizing medications for the individuals. Because let's face it, medications that you're taking aren't always necessarily exactly the right dose for you. Right. Now, based on studies and so on, they'll come out with different dosages, but it isn't exactly right for you. And that's where custom compounding came into place.
Okay.
That, in turn, opened up a whole nother avenue. What else could I be doing and helping with my patients that makes them feel better outside of just doing customization for their health with medications? And quite frankly, that was because a lot of patients were walking in saying, Vimal, there has to be something else that I could be doing for my health other than just taking pills.
Okay.
And I came to understand that what they were really looking for was that more of a preventative approach. What could I be doing to take care of my health so that I don't end up sick? If I do end up sick and do have to take medications, how can I reduce the side effects of those medications? And so when I started digging back into that, it took me back to school. It took me back to the science of the basic ways of how the body works in terms of biochemistry, physics, biology, all that type of stuff. And really the long and the short of it is, which quite frankly kind of ties into a lot of the things that we're going to talk about here in terms of money, is that you want to look at the basic building block of the body.
Okay.
And the basic building block of the body is, quite frankly, nutrients, vitamins, minerals, supplements, amino acids, all the things that you find in food that you can also then create as a supplement if it is something that is needed beyond just what you would get out of food.
Okay.
So that led me into more of a, this term's been overused, but quite frankly, more of a holistic approach to healthcare. Which means looking at things from the standpoint of what can you do so that you maintain good health. If you do get sick, how can you approach it so that you're taking care of creating balance inside your body, making sure that you are taking care of things from the standpoint of the building blocks. And an easy way to explain that is to think about it from the standpoint of everyone has nutrients inside you. Everyone has building blocks. And they're in different buckets, right? So if all the buckets aren't filled to the level that they need to be, and if they're not working efficiently, then something's off. And if something's out of balance, that can then turn into a health issue, that can then turn into medical conditions. Well, what if we were to identify the buckets in your body, identify how full or empty they are, also identify if those buckets are working properly, if they have a hole in them, are they getting rusted? So imagine if we could take care of filling up all the buckets in your body, balancing everything out, would you then need to be seeing anyone for health conditions or health issues?
Probably not.
Right. And that all depends, right? Because at the end of
Right.
the day, what I find is that the answer to a lot of questions to begin with is it depends.
Right.
So, for example, it depends. If you're not taking care of yourself, you're not eating in the way that you need to, and so on, that's going to create problems. That's going to create those buckets to be not full as well as they need to. It might even create rust in the buckets. An example of that is, chemicals that we have exposure to in the air, the water, the food that we eat. They damage your body. They damage the organs. They damage the buckets in your body.
Sure.
And so avoiding those things is a good way to go.
And I can speak to that because I believe it was about 7 years ago. We were just talking before we went on the air. That's how we met. I was having some issues, so mostly feeling lethargic and all those things, getting a lot of the cold and flu seasons, everything, every season, and kind of got fed up. My wife was like, I'm going to find you somebody to help you feel better. And that's how we met.
That's right. It's almost 7 years ago.
Something like that.
Yes.
And I can vouch personally that Vimal has helped my health personally. I feel much better. I've lost some weight, more energy. I feel younger, all that fun stuff. My wife and a number of friends and family that we've sent his way. If somebody's interested in looking into that, where can they contact you, Vimal?
Well, they can contact me through our website. It's called Time, like the clock, TIME, the number 4, health. So timeforhealth.com.
Excellent. And so I wanted to share with you a little bit of Vimal's background because it's interesting because in essence, that's how we met. It's going to lead to what we're talking about here, like Vimal alluded to with the money in your personal bank. When we first met, of course, you fill out that form and all that information about yourself and what you do for a living and all this. And I remember you asked me a very interesting question. You said, knowing I was in the financial world and all that, and he says, are you familiar with something called the insurance banking concept or the infinite banking or any of those kinds of terms? And I laughed and said, well, yes, I am.
I got to tell you, over the years, having the pharmacy and having seen so many patients, the business was successful, right?
Right.
And so, of course, you have financial advisors that you go to because at the end of the day, back then, my focus was on being the best healthcare provider I can be. And so I was focused in on that, thinking, okay, that's my specialty.
Right.
So when it comes to the money that the business is making, I need to find a specialist in the field of finance. So, of course, had a financial advisor.
Sure.
But I got to tell you, Ferenc, when you and I met, that was a low point in terms of the business and the financial aspects of my life as well as the business life. And primarily because 2008, 2009 hit.
Right.
And like a lot of people out there, it took my legs out, financially speaking.
Right.
And what happened is my financial advisors were basically saying, well, Vimal, there's nothing we can do. It's the market. We had you diversified. I love that term that everyone uses here in the financial universe. They keep talking about diversified. But I got to tell you, Ferenc, when I really looked at what I was diversified into, I was diversified in the market. In the stock market. Now, yes, I had stuff, in the real estate market and so on as well, but everything was attached to the market of one form or another, which meant that there was risk, and the risk was spreading across the board. And quite frankly, it hit me where it took everything away, whether the money was in stock markets or bonds, mutual funds, any of that type of stuff, or whether it was in real estate. Every aspect of my financial life got hit. I felt like I was on fire.
Right.
Like I had no idea what I should be doing, or which side is up or down, or where to even look for help. And that's the point in my life from a financial standpoint that I said, wait a minute, I've worked, I've done the best I can in terms of helping people, doing the best that I know how to help people. Why isn't the financial industry doing the same for us? Why are they just taking my money, saying that, yes, we're going to diversify everything and put it in places where there's constant risk?
So obviously that's what led you to start researching other things, and you started learning about the personal bank concept.
Correct.
Which is, of course, how we met and we started talking. In the next segment, we're going to talk about a little bit more with Vimal about how he got to that point of realizing the personal bank was the way to go for himself, his business, his family. He's nodding his head yes.
Absolutely. Quite frankly, I've become a fan of it. I am, shouting about personal bank as being one of the foundations for your financial well-being.
Well, stay tuned for the next segment. We're going to go into this further with Vimal. Of course, if you want to learn more about your health and getting more healthy, contact Vimal at time4health.com. That's TIME, the number 4health.com. And for more information, of course, on Your Personal Bank, contact us at yourpersonalbank.com. Stay tuned for the next segment.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. We're here with a special guest, Vimal Patel. He's a registered pharmacist, business owner, and a holistic health practitioner today. You can contact him at timeforhealth.com. That's TIME, the number 4health.com. And Vimal was talking about his background and then a little bit how we met. He helped me with my health situations, my wife also, and our family, and many friends and family members also. But how we met was interesting because, Vimal, you had asked me when we met, what did I do for a living? Of course, I'd filled out on that health form when you first sign in.
That's correct.
And started asking me about the personal bank concept. And I found it funny. We set up a follow-up meeting, and I remember you grilled me for like an hour with a bunch of questions.
Ference, when we did meet, as I'd mentioned to you before the segment here on the previous segment, yes, I was in pain, financially speaking. And one thing that I had learned from all of that is that I couldn't continue being financially illiterate, right? I had to understand that it's not just about having a business and making revenue, but then understanding how those revenues are going to be there for future growth, for expansion, for opportunities, and quite frankly, even for emergencies. And that is something that really kind of relates to health, right? Mm-hmm. Is that you always want to think about, how your life, in order for you to experience it to its fullest, there are a couple of things that you need. And let's face it, the world we live in, you require your health, but also you require your wealth.
Right.
And the problem I've had is that I had no idea about how to address the wealth part, because they don't really teach you that in pharmacy school or any of the medical schools or health schools. And quite frankly, the way that we're brought up here, that education is not something that's done in terms of understanding how to be financially literate. What they do teach to us as healthcare professionals is that, hey, go out there, do your thing, hand your money over to the financial guys, let them do it. They're the experts at it. Mm-hmm. And I learned the hard way by losing a lot of wealth and quite frankly being in a situation where I didn't have cash, right? Because at the end of the day, you need the cash in order for you to get through emergencies. Well, with all those dollars and the business that we have, which is primarily a fee-for-service basis, which means insurances don't really pay for a lot of the things that I do, because we're looking at it more from helping you and balancing things out for you, and they really look at it from the standpoint of what's wrong and what's broken, and we're trying to say, okay, here's how you need to fix it. So insurances really don't pay for any of that. So basically our business is a fee-for-service or a cash-based business. Mm-hmm. When 2008-09 came along and all of us got hurt in terms of the financial pieces, the business got hurt because there wasn't money for people to come to see me and help them with their health, despite the fact that that's when you really need the help in terms of managing your stress and all the additional issues that cause you to end up having more health problems.
Right.
So had to become financially literate, and that's when you walked into my life.
So obviously looked into the personal bank concept.
Correct.
You started using it. How are you using that? Why did you start using that as a tool?
Well, the biggest thing that I wanted to be able to do was to have access to cash.
Mm-hmm.
All the financial advisors, including the CPA and so on, had said, "Hey, Vimal, you're doing great with your business before the '08 downturn. You need to park it away for the future."
Mm-hmm.
Well, 401ks, SCPs, the IRAs and all that kind of stuff are things where they tell you to put the money. And also that's one of the ways that you minimize your expenses in terms of your tax consequences for the current year.
Right.
So all this money is sitting in these accounts that I cannot access.
Mm-hmm.
And I need access to cash because '08 is hurting me financially, personally, as well as the business.
Right.
And when I went to my financial advisors and my CPA and said, "Hey, the money that's sitting there in those accounts for the retirement and SCPs and all that kind of stuff, how do I get access to it?" Well, they said, "Well, you can't touch that." Well, it makes no sense. This is when the emergency is. This is when I need access to cash to help the business, to help myself personally. How am I going to get to it? I was going to, I had to, and I learned the hard way. I had to access some of those dollars, and I got to pay the taxes on it, but I also got fined.
Right.
I had to pay the 10% so penalties. Right. I call it a fine because, quite frankly, it feels like that. You're doing the right thing. You're trying to save and help your business and your family, and yet you're getting fined and getting penalized for wanting the access to take care of survival for today.
Right.
So that's really why I started talking to you and said, "Ferenc, is this for real?" Because I had started researching, and quite frankly, I joined 5 different financial clubs, started understanding and learning how to handle things financially. I basically fired my financial advisors until I could understand sufficiently to be able to then pick an advisor that was looking at it beyond just putting money in the market and exposing my dollars, making money off of me with their fees and the additional costs and so on that they have.
So one thing I've learned about you, Vimal, over the years is when you do something to go learn about it, you don't do it halfway, do you?
I don't. I dive in deep, and I either that's good or bad, but that's just my nature. Is that I want to understand how things work, and I want to be sure that I'm using that knowledge in a way that not only am I confident in, but that the people that I'm with, I'm able to do my due diligence to understand that. Look, I'm creating a partnership with you,
right,
from a financial standpoint, and I want to know that you know your stuff. And how am I going to know that if I don't know a little bit about what you do?
Right. So obviously you started using the personal bank yourself.
Yes.
For your business.
Yes.
And I believe, have 5 of them now?
I do. I have 5 personal banks that are tied in through to take care of all different aspects of my life with regards to the business as well as personally. What I find is that the biggest mistake that I made, and as a business person, but also personally, is not understanding the value of access to cash and cash flow.
Right.
Because at the end of the day, it's not about valuations and so on. And I know a lot of today is based on that. A lot of the .com companies out there are all based on valuations, but don't make a dime.
Right.
But when it comes to day-to-day living for the average person, we need money.
Right.
We need cash. And we need access to cash in a way that I don't have to stand in line and get qualified for it. So going to the bank,
right,
I have to give them all my business information. I have to give them all my personal information. They qualify me to make sure that I can, and rightfully so, because they're giving you a loan, whether it's business or personal. They qualify you.
Right.
And that qualification sometimes takes time. And not only that, sometimes doesn't work to your benefit. And this is the thing that I don't get. You're in pain financially.
Right.
You need help. You go to the bank. Because you're in pain and you need help, and because the cash flow is tight, they end up giving you and qualifying you for loans that charges you more interest.
Right.
How does that help an individual? How does that help us as a community? How does that help us as a as a society, when someone's down financially, you're going to hurt them more by charging them more interest?
Well, I think Mark Twain probably said it best when he said a banker is a person that'll give you an umbrella when the sun is shining.
Yeah.
And take it away when it rains.
Really, and it certainly felt that way. It felt
Right.
like when it was raining, it was pouring, and I was not getting any help. They were just throwing more water at me.
Right,
Yeah.
right. So obviously, the last piece we want to share with is, about 3 or 4 years ago, you contacted me and said, hey, I like this so much, I want to become an advisor. Why did you do that?
I did. I guess it's one of those. It's like that ad where they said that the guy liked the hair transplanting so well that he bought the company. Okay. So or the guy that bought the shaving company because the shaving company was really good. I really believe in this because I had the opportunity to try to break it,
Right.
to break the product, and to understand how the tool works. And guess what? It kept working. And with more time under my belt to understand how to use it, I realized that the more I can funnel and flow through the tool, the better it worked for me. And so I started sharing this with my friends and family that, listen, I know all of you guys are out there, doing well and making money and so on, and that you have your IRAs and your 401ks and all that kind of stuff. But you really got to look at this because, quite frankly, we as a society are not spending enough time accumulating cash, accumulating savings that are available, that are not only being protected and getting guaranteed returns in terms of guaranteed percentage income, but also getting tax favored, as well as allowing you to grow a cushion and safety for your family in terms of your children, so that if anything were to happen to you, you got run over by the bus, I knew I was covered.
Right.
If I needed access to cash today because of an emergency or an opportunity, I knew I was covered. And at the same time,
with the health side, you get the long-term care benefit too, right?
That's right. And that was the other part, is on the health part, all of the entire society, the entire world is aging.
Right.
And as we get older, we all know we all end up having all sorts of health issues. And more people are ending up in nursing homes and long-term care health issues and so on. And this covered that as well.
Right.
So you're covering the long-term health issues, you're covering your short-term and long-term cash needs, you're covering emergency needs and opportunity needs without having to get penalized by looking for that outside your universe, in terms of going to the bank or going to someone else to get loans. That's phenomenal. And hold on, now you're telling me that we have a program or a product that could possibly not only allow you to borrow those dollars against your death benefit as collateral, but then still continue making a positive arbitrage, a positive amount of money.
That is correct.
That's phenomenal. I don't know why more people are not understanding this and sharing it with their friends and family and other businesses.
That's why we're here.
Yep. And that's the reason why I became an agent and joined your company.
Well, thank you, Vimal, and we really appreciate you coming in today. Contact him for any health issues at time4health.com. That's TIME, the number 4health.com. And more information, of course, if you want to talk to Vimal about Your Personal Bank, contact us at yourpersonalbank.com. As for Vimal, he'll be happy to talk to you and share with you, correct?
Absolutely, yeah.
Excellent. All right, well, stay tuned. We got one more segment. I got a few other great things to cover. See you on the next segment.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
All right, we're rounding third. We just had a great couple of segments with Vimal Patel, registered pharmacist, business owner, and Your Personal Bank aficionado and agent now. So it was an awesome segment. If you missed it, go back to yourpersonalbank.com, listen to the previous two segments. Vimal has some very interesting insights telling his story through his business, what happened through the 08-09 financial cycle, what's happened since for him, his business, his family. Pretty interesting and very interesting journey. So, again, we thank him for joining us. There's a few other things I got to really share with you. I'm excited about like Vimal said, he said, I don't know why more people don't share this information, to maximize cash, tax-favored income, all that good stuff. And that's why we're here, to do this, share this. And as I shared with my good friend Dwight in the first segments, my friend of mine from back in the military when I was in the Army, he was heard my show from Tennessee, which was awesome, and he said, I had no idea you could build significant cash in a life insurance contract. And again, it's that comment, that response I get from people all the time is what caused me to share this information, what causes me to go and speak to different groups around the country. In fact, in January 8th, in fact, I'll be in Chicago. I'm not excited about going to Chicago in January, coming from Phoenix, but that takes some dedication. But I'll be there sharing, introducing the personal bank concept and doing a workshop up there. And then in Phoenix, we have coming up on Saturday, January 25th, I'll be doing our annual personal bank workshop here. So if you're interested in more information or attending any of those events, contact yourpersonalbankworkshop.com, sign up, and they're free, and learn more. So exciting stuff coming up, like I said. The personal bank concept, it's really like if you heard the last segments or two, it's not about just accumulating. So it's not just about accumulation. Of course, your money grows and all that kind of good stuff, like in other investments. But again, the key difference is you have access to cash. You have access to cash potentially with positive arbitrage. In other words, you could access funds from these accounts borrowed against the contract. The death benefit is the collateral. And you can actually earn interest on those borrowed funds. You have the potential of doing that. Based on current interest rates, for example, your positive arbitrage would be about 1.4%. You could access monies, use those monies for other purposes, just like Vimal was sharing, in terms of you have an emergency, you have a financial crisis, you lose a job or business income, get sick or work, or unable to work. Any of those kinds of things happen to people. Okay, stuff happens. You still have access to monies where you don't have to pay the penalties from IRAs, 401ks, and all these other kind of things, or the taxes at the very least, and get hit by all that when you're down. But the other thing is when you see opportunities. I do this with business owners and investors all the time. You see an opportunity. You want to expand your business. You see an investment that you like, and you think you can get a good return on it. Here's a storehouse of funds. Here's funds you can use, access those funds, use them for that opportunity, and still make money on it, still make compound interest going forward. When you understand how it works, you really start to understand why the wealthy keep getting wealthier and why the middle class keeps struggling. The wealthy, in general, often use this tool as one of their primary financial tools to continue to grow, maintain, and build wealth with tax benefits and, most importantly, access to cash. That is the true key secret to wealth. It's not how much you're worth on paper. It's not appreciation that's important. It's how much cash can you access, and yet that money still grow for you in the future. You will have more in the future that way in most cases. That's how it works. Anyway, all I want to say is take a look at it. If you haven't considered the Your Personal Bank concept, you're missing a financial tool. It can enhance your financial future for yourself, your business, your family. It can make access to more cash. It can reduce tax situations. It can accomplish a lot of things like Vimal shared also. It can help with long-term care, health issues, and it can take care of emergencies. I always say, God forbid you get hit by an ice cream truck, your family's taken care of. All those things are addressed by the Your Personal Bank concept. So again, if you want more information, contact us at yourpersonalbank.com and tune in every Tuesday at noon, 1510 a.m. or 105.3 Money Radio. And check this out. Get more information. Contact us. We'll be happy to sit down with you, go over your situation, and see how your personal bank can be a fit for you, your family, and your business.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.